Good morning, traders. It's 8:03 a.m. Chicago time on Wednesday, the 4th of April, 2018. Thanks for joining me. Sorry I'm a couple minutes late. It's been a pretty crazy morning this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully I'm coming at you loud and clear. Interesting developments overnight. The market is firmly allocating to safety and away from risk. Crude oil down $1.30, 62.22 on the May contract, down 2%. The Dow down 2% at 479 points, lower than yesterday's settlement. The Nasdaq's down 108.75 points, 1.67% lower than yesterday's settlement. And the S&P is down 36.75 points. The market overnight tested all the way down. The S&P tested all the way down to 2559.50. This, in case you just woke up, this is the result of more news. Remember, we just basically trade news these days. China retaliates to U.S. tariffs by announcing that yesterday evening, which is their market morning, that it's including 25% tariffs on soybeans, automobiles, chemicals, which Dow is heavy in, and they are basically imposing these tariffs, levying tariffs on 100 products as a response to the. Actually, it's 106 U.S. products worth about $50 billion a year in impact to U.S. goods. So this, again, is in retaliation to the current administration's push to impose tariffs on China to bring the trade deficit and balance into line. This is it's just one of those things. Now, don't get me wrong. I don't mind instability in the markets. In fact, I welcome it better than the high-on-high grind we've had since late 2016. So today I'm expecting there to be a fair amount of movement. I am expecting this to have a pretty decent follow-through. The market did push down and did find a decent base and is attempting to recover now. I'll show you what the heat map looked like on that. But overall, I'm expecting news flow to continue to dominate the trade. Yesterday, here's what was expected. I was looking for a bounce from the 25.75.50 area, and for the market to push into 26.13. We ended up basically playing out this first scenario, although it was disrupted a little bit on news. That's the primary scenario. I'll show you what that looks like here. Here's what it looked like in the actual. We pushed down into 25.73.50 right at the bottom of that stock zone from yesterday. That was outlined again. Here's what it looked like yesterday. Right at the bottom of that stock zone is 25.73.75 yesterday before I adjusted it. The low is 25.73.50 off by a tick. And then we bounced straight up into 26.09. So here's the 26.09 right here, 26.09 area. And then what we did is we dropped off. It looked very strong. I stalked this long off of mid VWAP and the point of control, noisy area, and it turned out to actually, in fact, be noisy. And then as soon as it was unable to get back through the 2600 on the retest, I'd cautioned traders in the CT room that it is likely to drop. And then we got the news on Amazon, which I put on Twitter. We got this strong news up that the U.S. Government's is not likely to take action on Amazon, and it just shot us up to 26.18. We finished at 26.1350. So yesterday we ended up regaining close to close 37.50, 37.5 points versus the prior day. On the big sell-off, we lost 60.75 points between Thursday's close and between Thursday's close and Monday's close. And so that's how things are shaping up. As far as the overnight session, so this was scenario 1 from yesterday, with a little kick to it with this news. So what have we done overnight? Overnight, we were unable to stay above yesterday's close, and the overnight inventory is deeply short, 100% short, basically. We reopened right when we closed, and then we drifted sideways into 2606, which was the peak, the early peak yesterday, again on scenario 1. And then as the Asian news kicked in, boom, we saw a reaction in the European markets as well. So the European indices have lost 1% or more this morning on that news. Trade wars that are not market driven are not a good thing for either party, just like pretty much any war is not good for either party. So this, like I said, I welcome the volatility. This creates an unknown, and as we all know, the market does not like unknowns. So my chart colors are a little bit off here. This gray, I need to readjust, but let's try to play with this. The expectation for today, we are at the bottom end of yesterday's range. So yesterday's low is 25.7350. The overnight low is right here, 25.5950. We're opening right here. The expectation is that we are likely to open and find a quick push lower, and I'm expecting it to push deeper and then revert back to the point of control yesterday, which was sitting right at 25.91, and then I expect it to bounce around in there and make another go at 2600 again. That's the primary scenario. So with the overnight inventory being as deep short as it is, I do expect that when the equities open, that we get some a little bit of follow through. It may even stop right in the 25.69 area before it turns back up for a base. So what am I doing with this? On days like today, I am standing by for at least the first half hour, if not for the entire initial balance period. Lately, I haven't been able to stock clean trades and put them on in that first half hour, and then it becomes much more clear a little bit later in the session. So I'm going to stand by as it makes its first move, because the first move is going to be responding to the news, and it's pretty much anybody's guess. This market could become immediately responsive and push up, which is scenario 2, push right into this 25.91.25 and then into 2600 immediately. But the first scenarios, I'm expecting it to flow lower as more participants come in to reduce their exposure, their equities exposure. But ultimately, I'm looking for it to turn back up. Again, this is movement on news. This is fundamental news or macro-based news, and we don't know if it'll actually play out. And so I expect a revisit of the scene of the crime. A lot of what caused Monday's drop is the same kind of news, and we're still trading in that area. Monday's low is still intact, and as I said yesterday, my expectation is we have a good low from Monday, and I'm expecting higher, hence the scenario 1, which played out yesterday. So this is my primary scenario. Secondary scenario, a rebalance of the overnight inventories expected, poke below yesterday's low at 73.50, and then an immediate push into 2600, consolidate between these two stock zones, and then start to push towards yesterday's high, targeting 27 on the extended target range. Okay, the tertiary scenario, or the third scenario, is an open test drive or an open rejection reverse that immediately bird dogs down to the overnight low, and we start to tackle Monday's low at 25.52, and we start to look at the levels below. I'll shift the screen here in a second, but this is where the market is expecting earnings and revenue to be severely impacted by the imposition of these tariffs, and is pricing that in. In either case, the market has news that it's revaluing, and that's the important thing to know, is that this is an auction, and the reason prices move is not because we're pricing things to where they are now. Most people think, the market is theoretically an efficient and almost perfect pricing mechanism with all these computers trading, when actually to price in today's news, when actually no, the market is pricing for future expectations, and so it has to revalue, given this pretty serious news. It has to revalue where it thinks future values are for the various S&P stocks and so on, and that remains to be debated. And the way we debate it as market participants is with our money and with our trades. And so that's really, we're going to be in the crossfire as day traders. Assuming you're a day trader, we're going to be in the crossfire of this debate. It's going to be a snowball fight between the buyers and the sellers and what they think the valuation should be. So there's a little more risk today, but there's also more opportunity in that this brings in volatility and repricing. So today is a good day to grab a big cup of coffee and pay attention to what the market's doing, but it also is a day to make sure that you have a healthy respect for risk and that you're not blowing away a month in today's action just because you anticipate there's going to be a lot of movement and stuff. The plan is the plan. I'm trading a reduced unit size, expecting wider ranges. The plan is the plan. Our risk parameters have to be adjusted and needs to be widened, and therefore size needs to be reduced. And of course, if you're trading a one lot in a futures contract, it's tougher, so you have to be a lot more picky today, or wait until the 11:30 Eastern period when the European markets close and things start to slow down a little bit. Conservation of capital is very, very important. Okay, not having a position on is in fact a position. So those are my words of warning. Here's what the overnight session looked like. So there it is. So the overnight session, a lot of bids below that just kept canceling, and a lot got hit on the way down. A lot of bids got hit on the way down, and so what we have is a market that was going on its doing its merry business all the way up to yesterday's high, where there were a lot of offers here into the close, and then it just drifted down, and a pretty strong move down with pretty good volume right here, and then it's had its impulse consolidate continuation, and now this looks like the corrective kind of ABC type of response, and hence the scenario number 1. And we are likely to come back into this point of control area today. So this can also be seen as an inverted head and shoulders formation if you're into that. I don't really trade patterns, but that's how things are shaping up. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.